Good morning. I'm Colleen Ferrary, the founder and president of Small Business USA, and I am here with Tim Nihill from Merrill Lynch. And I am so happy to be talking about this topic today. And I'm so happy that you could join me, Tim. So welcome.
Thank you. I think to start off, obviously, good morning to everyone. I just have to give my disclaimer. My views don't necessarily reflect that of Merrill Lynch, so please don't hold them liable. And don't construe this as investment advice. Before making any decisions, obviously consult with your financial professional. And I can be shameless in self-promotion. If you don't have one, you can just call me.
I love that. I think we'll at the end, we'll give some contact information about how to get a hold of you. But first, you guys can always connect by following Tim. You can see right above his name to the top left, you'll see a little icon. You can check that to follow him. And if you want to give him props and if you like something he's saying, just click these little hands. And that's a great way to kind of say you want to hear more. We love questions too. I mean, this is about Ask the Experts for Small Business USA. We do this every Tuesday morning at 10 a.m. So if you have a question, if you look on the left-hand side, if you're not using a mobile device on your laptop, it's on the left. It'll give you that /Q. If you type in /Q, on in the message, it will post that question up for everyone to see it. So we look forward to questions today. Members, you know that if you're listening and following, every member has my cell phone. I take texts during the call, and I will be happy to throw any question that you have at Tim. So Tim, okay, let me just start it out here. And Tim, I think if anything, I'm a tea leaf reader. My job is I want to predict the future for my small business owners. I want to know what's in the future. If I could pay to see the future, I would pay millions of dollars for that, I think, along with many others. But I spend way too much time obsessing about how do we put all these little tips and pieces of information together so I can make a more educated decision for myself as a business owner and for my businesses and for my members. So, let's just start off. I mean, the stock market is on a roller coaster. We've had the worst start ever for the start of a year, the most tumultuous start. We've had more daily moves every single day than any month since 1990. I mean, oil prices are so closely connected to stock prices right now. It's frightening. We have craziness going on in China. I mean, I could throw out the simplest question, but it's also the most complicated. What the hell is going on?
Yeah, it's kind of funny. It's just one of those things. I think that these are just now our economic times. This is our economic reality. And I think part of it is just we're waking up to really being connected as a global community and global economy, And it's just, it's just all part of the process. I mean, I wish I too could read the tea leaves and, it's funny. We always talk about predicting the stock market and all that stuff, but unfortunately it's just not possible, especially with everything that goes out there and goes on out there. I think the thing for people and investors and professionals is you really just can't panic. You can't make decisions out of ego. You can't make decisions out of greed. You can't make decisions out of fear. And I kind of look at today's market and what we're hearing and seeing on television and things like that. It kind of reminds me of a story that I heard a long time ago. There's a plane that's about to crash, and there's 4 people on the plane. You have the president of the United States, you have the smartest man in the world, you have a priest, and you have a hippie, right? So there are 3 parachutes left. President says, I'm important to the United States of America, the country needs me, takes the first parachute, jumps out the plane, flies to safety. The smartest man in the world says, well, I know everything, and I'm going to make an unbelievable contribution with my brain to the world, takes the next parachute, jumps out of the plane. The priest looks at the hippie and says, my life is in God's hands. and I'm a man of faith, you take the last parachute. The hippie says, nah, don't worry, Padre. He goes, the smartest man in the world took my knapsack and jumped out of the plane, so we both have a parachute. You know, and yeah, I think that's really what today's markets are all about. And, you know, most of my day is spent calming people's fears. Like my job and my role is more become like a financial psychologist more than anything else. And a couple of stats and things to keep in mind is that if you look at the history of the stock market, only 17% of investment managers have ever beaten the benchmark. So that means 83% of those out there are completely wrong. They're kind of like your DNF students.
Yep.
Right?
We heard the other day, we heard on CNBC. That the stock market has predicted 9 of the last 5 recessions.
Yeah.
It's not a predictor. I think that's a great call. And so, you know, talking about being a financial psychologist, right? So I called Tim the other day and I said, did you hear this analyst from Scotland and what's all over the news on the Guardian promoted? And so this analyst from Scotland went out there and said, sell everything. This is the worst economic time we're ever going to have. And kind of created this whirlwind of speculation and uncertainty and fear. And is it fear mongering? I mean, we can talk about the fear of contagion later, but I think it's great. I think your advice then, I'd love for you to say it again for this group.
Yeah, I think part of that is, you know, it's kind of funny is I talked about this with an investment management firm the other day that I was chatting with, and you know, the people who speak the loudest tend to be the ones that are wrong. And if you look at, on average, the estimated earnings and what forecasters say, on average, they're operating on a 6 to 9 month lag. And on top of that, their forecasts on average are 40% wrong. So a lot of it is really, you know, to gain hype, to get people to pay attention, you know, to get people to watch TV and all that stuff. You know, I'm not saying that this doesn't have an impact on today because we are so inundated with information. But I think at the same time is we've moved from a world in where we focused on going with what our intuition is, right? And focused on how do we feel, how does that make us feel, what are the decisions we should make based on our intuition to, you know, we're making decisions based on our brain. Well, this number says this, so this and therefore is this. And, you know, I think we've moved from a world where we've gone from being generally correct to being precisely incorrect. You know, and I'm not saying especially, go ahead.
Right. No, I think what's interesting about what you're saying, and even your demeanor compared to mine, because I wanted let's get to the bottom of this, Tim, right? But I think it kind of aligns with Merrill Lynch's philosophy. It's slow and steady, and Merrill Lynch has been very successful, one of the most, if not the most successful investment house for years, because they just don't ride these waves. They're very consistent and thorough and thought out, and they don't react at guffs, I guess.
Yeah, and I think a big part of the success and what helps us stand out is the approach. It's really focused on goals-based wealth management with clients and financial planning. You know, the markets are going up and down today, but we're spending our time trying to solve even bigger problems that are out there in our marketplace and economy. Like I was going through one research report this morning that I have on my desk, and I mean, let's talk about the retirement crisis today. You know, 77% of American workers today don't think the value of their savings and investments will keep up with inflation. 73% of workers today don't think they have enough money to pay just for health care and retirement. And 66% think they're going to deplete all their savings. You know, so there are some larger, more fundamental issues that need to be solved and addressed, and not worrying about the day-to-day fluctuation. Now, that being said, you have to take that into account, but it's all part of the broader plan.
Mm-hmm. It's a great point. And, there's a statistic that shows that 63% of business owners don't plan effectively for their retirement at all. They think their business is a retirement. They take all of their investments, they put it into this business, and either, we know for a fact that 85% of them lose it, and are not successful in their small business, which is a very scary number, one that we're working on changing pretty aggressively. But there's this other piece of, you have to plan out and think beyond this blip in the stock market, beyond what the economy says. And I want to get back a little into the economy, and I want to talk a lot about what should a business do to make sure that they're really being in tune and prepared. But, prepare for the worst, plan for the worst, and hope for the best, right? But if you're prepared and you're ready and you're thinking of the future, whether we're right or wrong today, won't matter. You'll be prepared for whatever the economy is going to bring you. And I think as a small business owner, kind of always have to think about that. What if, and as long as you're prepared for that and you're thinking, how do I make my business recession proof? How do I make good decisions for my long-term retirement and plans? Then you're safe. And I think it's about being safe. You're taking enough risks owning a small business. Don't take them with your future. Don't respond or react, I guess, to the stock market. Brian has a question for you, Tim.
Yeah. So, and I want to get back to that point about the small business owner and preparing for retirement. I know we should be patient, but what to use the sell-off as an indicator that we should sell investments. Brian, my conversation with my clients very much comes down to how they feel and what we think is the best strategy for them. So it all comes down to each personal situation and then what the recommendation is. So with some clients who are just so close to retirement and so risk adverse, that might be an opportunity to say, okay, we can dial it back and to go all cash, more conservative, whatever. But for most of the folks that I work with who still have a 10 plus year time horizon to retirement and they're not touching their assets, depending on what their risk exposure and their job exposure is to the economy, which most people don't think about and talk about, that's probably a decision where we're going to say, just ride it out, stay invested, keep, getting dividends and reinvesting that into our savings. And then when we catch the upside, that'll just be accelerated growth. And I think a lot of people there, Brian and Colleen, learned this the hard way in 2008 because they sold off in fear, and they missed the 300% correction on the upside. So it's just one of those things where I think it's with everyone's situation, how do they feel and what's best suited for them?
Yeah, that's a great call. That is a great call. And one thing I will share, Brian, one thing that I really pay attention to is consumer spending. So I think consumer spending is an indicator of where our economy is going. Jobs growth is an indicator of where our economy is going. And if you look at those two statistics, last quarter, MasterCard showed that this has been the best spending year in a long time for increase. I think we had a 17% spending increase in the fourth quarter of the year, which is just unheard of. I mean, I've never seen anything like that. So it shows that buyers' confidence is out there. And then we look at the jobs creation. We had one of the best years for job creation. There's a strong jobs report. I heard this on, I want to talk about the Wall Street Journal article yesterday because I thought that was fascinating. What their correlation, what the Wall Street Journal said about the correlation between the stock market and oil prices. But I want to go back a little bit and here. I heard this on, I think it was PBS and the New York Times both said the same thing about a week ago. They said, we need to really look at, we are in a global economy, and we looked at 2007, 2008 having a recession in the United States. And then we watched that kind of ripple over to Europe. And then Europe is they're in this place where they're just recovering from their own recession. They had a very late recovery, and we're seeing numbers come up. And now we're into China, and China is kind of on the verge. There's so many similarities to what happened to us in 2007 that's happening in China right now with their currency devaluation. They're in a housing bubble. there's signs of a financial crisis. Potentially, this is this ripple effect that we're seeing move from the United States and kind of move through the global economy. And this is just natural. This is not necessarily the sign of a global recession. And any thoughts on that? Any thoughts on those reports?
Yeah, it's kind of funny because, I was watching and reading some stuff this morning on, maybe we've overvalued, the correlation of our economy to the price of the barrel, especially as, we tend to expand and we'll find different fuels and alternative energies, things like that. But, I think it's all just us figuring out across the world now that, a lot of countries, including China, have opened up their doors to doing business with the rest of the world. They're trying to figure it out. Like one of the biggest things and issues that China is having is they're having one of the biggest entrepreneurial classes in the middle class that's just burgeoning. Mm-hmm. All of a sudden, there's a lot of middle-class Chinese people that are business owners that are starting to make money. They're buying Mercedes, buying BMWs. This is something that they've never seen before in their economy. So a lot of it is just adaptation, into this new world, if you will, for them. Yet at the same time, they're dealing with having older systems. I mean, you look at the pollution problem they have there and just their economy in general. They're things that just need to be figured out.
Hey, Billy, welcome. I saw your question. Have you ever been to China? I know a lot of people living there right now. It's a shame that I haven't. Have you been to China?
4 times.
4 times?
Yeah, and Hong Kong once.
Oh, I've been to Hong Kong. What do you think of Hong Kong?
Yeah, I don't like it.
Yeah, I wasn't really a big fan of Hong Kong myself. But
no.
Hey, welcome. Did you have a question or thoughts on China you wanted to share?
Well, I've been there 4 times since 2007, and to the southwest, mainly to Sichuan province and the city of Chengdu, which has 11 million people.
Have you been there for business? I noticed. I think it says you're a chemical engineer.
No, actually, I went. I have in-laws there.
Oh, cool!
Awesome.
And what I noticed is, especially when I went in 2007, there was, everyone was on scooters or bicycles. There was very little traffic, and I stayed for a month the first time. The second time I went, each time I went, I stayed for about a month. But the second time I went, I came back and there were so many cars that people were actually parking on the sidewalk. So they were experiencing incredible growth that unimaginable here.
Yeah.
Go ahead.
There was just an article yesterday saying that this particular subgrowth in China right now is they're buying up pink diamonds. Did you guys see this? Buying up pink diamonds, champagne, stock, and real estate right now because they're taking advantage of the fact that there's this subsector of China that's really growing and things in China are so cheap. And so they're pulling in Western money more than ever before. So the economy is absolutely tilting in China. So it's kind of interesting to see, for you to share that you've seen that economic growth as you've been there.
Well, I have. They've made trade deals, especially with Germany. And I can't recall if it was 50 billion or 500 billion. I think it was starting with 50 billion. But you could really tell all of their infrastructure. They don't build their own trains. They don't build their escalators. They buy them from Germany. And they put in subway systems, and just the growth they do is incredible. I mean, the way they're able to do it through their central planning is just incredible. And I mean that's the reason their economy is expanding, of course. But I think people are either don't know really about the Chinese economy and the Chinese consumer, or they're being completely disingenuous. with America saying that China's in trouble, that their economy's in trouble. I mean, they're not in trouble. We're in trouble.
The stock market just dropped another 200 points yesterday. I mean, their stock market, I mean, the yen was overvalued, right? We know that. So is this a correction, or they've been getting beat up for the last 30 days more than the last 30 days in the stock market? So
but very, very few people are in the stock market in China. So how many people does that really affect? I mean, they have 2 billion people. How many of those people are actually in the stock market?
More affects our investors versus theirs.
What was that, Tim?
I think it more affects our investors versus theirs.
I mean,
their most valuable asset that China has right now is their people, their workforce and their people. And it's kind of leveraging that to build their economy and come out of this. Like, China will never, it's the second largest economy. It's like the United States in 2008.
It's actually the first. They have the biggest GDP in the world now.
I'm not going to argue that, but
I mean,
as of Wall Street Journal's comment yesterday, they have the second largest. I don't know what that means or what they're weighing it on, but
no.
I think that with China in trouble, it goes out there and it says if China, whether the largest or the second largest, whatever they are, what is their effect, and what is this correction in their stock market? How does that affect us in the United States and the entire global economy? They're big. I mean, we saw the ripple effect when the U.S. went through it in 2008. We saw the ripple effect throughout our global economy. Could what's happening in China right now in their stock market, could it affect us? They're in this huge housing bubble that they're right on the cusp of. They have empty properties. They've overbuilt. They can't fill them. Is that going to affect them and change their economy?
I haven't seen that. I haven't seen that when I've been over there. I mean, they talk about ghost towns, but is that an isolated event? I mean, you could say the same thing for Las Vegas or perhaps Arizona, but that's not indicative of the whole country.
No, look at right now, oil, right? I mean, oil is a great example. So oil right now, oil prices are the lowest since 2004. But you look at, so we've had 40 in North America, 40 companies have filed for bankruptcy protection. Alaska, North Dakota, Texas, Oklahoma, and Louisiana, right, are our biggest oil booming states in the United States. Is it affecting the overall U.S. economy? We've now seen the tightest correlation in 26 years between oil and stocks. But you look at those 5 or 6 states that are really being affected by oil, and we can't assess the entire economy based on 5 states and 40 companies. That would be like us saying in China, based on the state that you went to, you didn't see it there, doesn't mean it doesn't exist in the entire country. You can't like take this microcosm and say it applies everywhere, but we do have to pay attention to the fact that it's affecting their stock market. It's affecting the global stock market. Both oil and China are right now. And we're seeing the effects in the United States in January. We've never in the history of the stock market seen the effect. We've never seen this much movement, and we've never had a worse start in the entire history of the stock market. There's got to be something to be said for that. And it's what do we do as a small business owner to protect ourselves and prepare, that I think is an important question.
Well, and that's what we were talking about before, Colleen, is, our world is completely changed. 2008 changed everything. Being a global economy changes everything. And this is just part of our learning process. And going back to the point that we talked about earlier, the biggest mistake I see small business owners making is kind of twofold. The first, as you touched upon, one of them is they don't prepare for their retirement, right, properly and ahead of time. Like I have a client who's a restaurant owner. He's 69. He goes, "Oh, I got to put money away for my retirement." I'm like, it's a little late for that, because he never saved. So, we do what we can with the assets that he has. And, at some point knowing he'll have to monetize his restaurant. But it's especially for the small business owner. And I think you touch upon this with China is life is really a transition for, between human capital and financial capital, right? Where at the age of 21, or even at the start as a business owner, you start off with zero financial capital. You have no income coming in the door. There are no assets, usually starting by going into debt to get your business off the ground. Your job is to transition that into financial capital. So then when you get at the point of retirement, you're at pretty much no human capital and productivity, and you're at 100% financial capital so you can move into retirement. And I think that's something China's trying to figure out is they have, as an economy, they have such a wealthy human capital that how do you, transition and take that human capital and monetize that into financial capital. And it goes back to what we were talking about. I mean, you can look at what's happening. I mean, the global economy is not going to collapse. It's just a matter of, being smart about what you're doing today and how you feel today and making the right decisions. And from a business owner and a small business owner standpoint, I think, and this is even for everyday investors, is too many times people are making decisions in a vacuum, right? They're like, oh, I have my retirement savings here and I have my business over here and I have, my personal savings and checking over here. They don't think about them all together. And then the other thing that most business owners don't do from a planning perspective is they don't take a step back and say, okay, how exposed is my business to the marketplace and the economy? So for a restaurant, for example, where you have a 2008, if you have a restaurant owner that doesn't have the hedge on the side of, should the economy drop and I start losing customers, do I have enough in liquid capital to be able to push my business through this point of time? And I think it's for small business owners, the first question that you have to ask from a planning perspective is really, how exposed am I to the economy and the financial marketplace? I use myself as an example. I mean, I work with finance every day. My exposure to the markets and the economy is very high. So with my personal assets and my wife's assets, we have the hedges in place on the side to say, okay, if we take a hit in the economy, that affects our income from a financial perspective with the wealth management business, while we have enough working for us on the side that we can ride through the times.
Yeah, I agree. I think you have to think about how do you balance out and be recession proof. So I love that you guys are so focused on that.
Yeah, and it just goes back to what we were talking about before. It's just one of those things where if you have the proper plan in place and you have everything from a planning perspective, both personal and business, all aligned properly, and you're eliminating as much risk as possible, you can sit here comfortably through these times saying, okay, I can ride this out, we'll be fine. And then, ask the question, is this a time to reinvest in my business? Is this a time to find, because there are buying opportunities out there, there are investment opportunities out there to say, is this a time to maybe change and reinvest in what we're doing? So then as everything recovers and we get through whatever you want to call this down market in 2016, that we're accelerated growth on the upside.
Yeah. And I would we're having this conversation all the time with our peer advisory boards now. Like, okay, so this is probably, if you look at the economy right now, there's so many arguments on both sides. Is it stable or isn't it stable? Is the world flat? Are we unaffected by what's going on everywhere else? There's so many different conversations, but I think most importantly is to look at your own business as, if you're like, to Billy's point, you're going after that subsector of China that is really thriving right now, right? And are they going to continue to thrive? Figuring out who that population is, and if your business is servicing them, you're in a much better position than the person who is maybe, servicing that lower 20% of the economy.
Oh, I mean, do you have access to that market?
I'm sorry, what was that?
Do you have access to the Chinese market? What would you sell them?
What do you mean by that, Billy?
I mean, what would you sell them? I mean, what do you have that they want?
Yeah, I think it's a good question because every business has something. It's funny. We were just on a board meeting with our elite advisors, like our advisory group with Small Business USA, and we came out and we're talking about our business with Small Business USA has become far more global because as businesses like in India and China are trying to figure out how to do business and culturally make a connection with the United States, there's a draw. And so right now we have business owners that are members in India and Canada, and we're talking to a big subsector right now in Switzerland and Germany and helping them build their businesses here. But I think the beauty of business is it doesn't have to be, I'll give you a great example. We talk about shop owners. Business owners right now that have a storefront are really trying to figure out how to survive right now. And I think they don't have to only sell their dresses and shoes to the people that live in West Hartford, Connecticut. Today, they can go out there and they can sell their dresses and shoes in an international market and sell to those folks in China who do have the money and who want to spend money on boutique clothing from the United States. We've become much more open to that. You have to find those markets. So I think a big piece of it is marketing to the audience that is able to purchase your items in a recession as well. When we look at luxury items, historically, the top 1% is unaffected by recession, right? But we also know that the top 20% of the economy stops that spending on that luxury spending. So, I think about if you are going to, have custom made suits. Well, maybe if the recession is going to turn, if you're a custom made suit retailer, you may need to figure out, well, how do I now adorn and change the look of those custom made suits without, still selling the $10,000 or $20,000 suit? How can I sell them ties? How can I sell them cufflinks to make their suit look good? They still get that fix of buying, but they're not spending the $10,000 on the suit any longer. So I think as a business owner, you have to kind of ask yourself that question, who will have money if the economy steps back, and how am I going to continue to service them?
Or just making sure they have something on the side to take them through it.
I think that your perspective is very American because you're concerned more about the stock market because your retirement is in the stock market. Everyone's pension is in the stock market. And that can't be said about other countries. China's pension funds and everything else aren't invested in the market. So that's going to affect the Chinese people much less than it would here because everyone, if they have a 401k or if they have an investment, for a pension, it's tied into the stock market. So people, when the market goes down, it has a tangible effects on their balance sheet. Basically, they can look at it. It's tangible. Wow, it went down 10%. That's your retirement. That might not be true in other economies. They might not have put all of their money into the stock market. They might have saved it in cash in the bank, and that's what the Chinese do. They save it in cash.
No, I think, it definitely is. It differs across the globe depending on obviously where you go. And I think, today we're just talking about this country, but even across the country, whether you're in Sweden or London's a great example because they have two pension schemes there, and in China, et cetera. In some way, shape, or form, they're all exposed to market conditions and banking conditions in the fact that as valuations change their actuarial assumptions and what they can afford to support for, their citizens, they have to step back and take a look at, okay, something just changed. Are we going to have enough money to support everyone's pension, whether it's Canada, London, China, whatever? Do we have enough to support that liability? And then do we have to take in a cash influx to put aside to support that future liability? Right. So I think everyone in some way, shape, or form is definitely affected by the economy, whether directly or indirectly. It's just, I think our conversations in this country is dramatically different than every other country. And it's just funny. Again, and it was the same report I was going through. One of the reports and things I was reviewing today is, in 1983, 62% of workers were covered by a pension in the United States of America. That number is 12%. And, if you look at the 401k in 83, 17% of people were covered by a 401k. That number has reversed. It's 71%. Right. So it absolutely, and Billy's right, it's a different experience for us because we have to be self-sufficient and we have to be responsible for ourselves where we don't have, we get less help from the top, in taking care of our health care and our pensions and retirements.
Well, we have all of our eggs in one basket, and it's called the stock market. So you go into a pension.
And I guess it's also capitalism as well. We have the ability, I think people hire people like Tim because they don't want a rote style retirement. They want the retirement. They want to continue to living the life that they have grown accustomed to as well. So, and unfortunately, I think you're absolutely right. But the truth is we are American and we do have to focus on our retirement, and whatever that retirement you want to look like, for the majority of us are really dependent on that stock market to do it. I remember in 2008, when the stocks really started to tank, my father-in-law at the time, he was retired and absolutely, I thought the poor man was going to have a heart attack because he watched his future just dwindle. And thankfully he had a great advisor who just said, just hang in there. Don't touch it. It'll rebound. There's always corrections. But I do think when we talk about small business and the economy, that year where an economy tanks, if we go back to 2008, those people who are living in the moment, who are dependent on that income coming in, those people who are going to lay off, if the economy really changes today, there are small business owners who are going to lay off people. They're going to, and I know, I look at our cast of members and I am so thankful for them. But I think about the people, there's not one of them, when they have 1 or 5 or 20 or 100 employees, they know them all. And to lay off 5 or 10 or 15 of them is a heartbreaking experience. So if we can have dialogue today that's going to help them think about, there's uncertainty out there. We have an election year. This is probably you could not write a story about our election this year that any producer would ever buy or director would ever buy, because they would say, you couldn't make this stuff up. This could never happen in real life. What's going on with our presidential election?
Actually, it did happen, and it happened. Ronald Reagan. I don't know if you remember him.
Yeah, admittedly, I'm old enough to remember. But look at there's
he was a B movie actor, and whoever thought he could get the presidency, but he did, unfortunately. So.
Well, unfortunately or fortunately, some would argue that he was one of our better presidents of all times. Look at the change that he made. We wouldn't be talking about a global economy if it wasn't for Ronald Reagan right now, right? Yeah. So we wouldn't. You wouldn't be flying to communist countries if it weren't for Ronald Reagan right now. We've broken so many barriers.
That was Nixon.
Nixon.
Well, Colleen, going back to what you said before and it's kind of funny. It's, I spend, I would say, the vast majority of my time and energy protecting clients from the stock market. with those strategies in really taking a look at a more of a holistic financial wealth picture. Because and this is just my personal statement I tell the people, you're going into a casino with your retirement plan. What do you think the outcome's going to be? So it's really having those types of conversations. But yeah, 2016, I think, is obviously going to be a very interesting year, continuing off of 2015. And we just have so many variables that have changed across the world that need to be figured out. And then on top of that, so that's the first half of the year. On top of that, the second half of the year is now we're going to move into a presidential election. And I don't get involved with politics, and I don't have any views of politics. I just, at the end of the year, I sit back, see who's going to be elected, and I say, okay, how do we feel about this, and how does that affect how we move forward? But man, at the end of the day, I just kind of feel like the United States, we've just become like an open book now, and we are completely exposed to the rest of the world as other countries are becoming more exposed to every other country in the rest of the world as well. And I think just, all of that stuff will play out as it will play out. But it really comes down to the fact of sitting down, feeling through what you think your future is going to be, and just aligning your life and your plan around that and just continuing just to move forward.
Yeah, I agree. And I think we need to, if I had a crystal ball, I don't think the economy's in trouble. I think we're just watching corrections happen, and we're seeing the economy fail. But we're seeing like little corrections here and there. I think we're seeing the ripple effect of some things that are happening, and we'll readjust. But I just, I think it is an interesting year. And we have, is it March 2nd, second Tuesday in March that we have the New Hampshire primaries. So we're having a fun blab then about politics and the presidential race. And I think that will be kind of an interesting conversation for everybody, and probably just as spirited as today, right?
Yeah.
But I think if I could give everyone on the call one message, it's you just prepare for the worst. Don't, and I think, what I heard from you is, prepare, don't make any rash decisions. But if you're a business owner, you need to think about what could happen. And if there is a 10% chance that the economy could slink back into a recession in the back half of this year, how will your business be ready for it? And how are you preparing yourself and your financial future? What advice would you give people, Tim?
Yeah, it goes back to that. If the market drops 10% this year, how are you going to handle that? But at the same time, I say don't fall victim to the FDR syndrome. And the FDR syndrome, and this is kind of like the societal result of the Great Depression, is we've become reliant on experts, whether they're lawyers, doctors, financial, experts, economists, whatever, to run our lives for us. Don't lose confidence in your ability to own your own life, make the right decisions, follow your intuition, and then move forward.
Billy, do you have any words of wisdom for 2016?
Go to cash. That's what I did. I cashed out. I took the 24% hit and cashed out of my 401k. I diversified. I put some of it in RMB denominated savings, which I don't know which way that's going yet.
So it sounds like you don't have a lot of faith in our future economic growth.
Well, what is the Fed going to do? They have what, $4.5 trillion on their balance sheet, and how much more are they going to put on their balance sheet? And we don't know what that consists of. Now, we don't know if the Fed bought all those bonds that are now going bad in the oil sector, because they bought bonds. That's what they do. So, and they put it on their balance sheet. So how much of that bad debt is now on their balance sheet. Probably nothing, but I just wonder what dropping oil prices is supposed to be good for the consumer. It's supposed to help us, but we're not seeing that, and it's kind of counterintuitive.
Well, I think the thing that makes everybody nervous right now is this year we've lost 250,000 jobs because of the lowered oil prices. So I think there's some real economic situations, and it goes back to the beginning of the conversation. When consumer spending is down, there's a ripple effect that happens. So I think, to the Wall Street Journal's point yesterday, we're seeing this so closely connected to the stock market right now, because it's to the point where it's not just the price of oil is going down and the per barrel share. It's that jobs are being lost, and and 250,000 is a lot, right? All right. Hey, thank you, Billy. Thank you for joining us. Thank you, everyone, for jumping on today. Tim, I love the message, and I think it's about being consistent and not panicking and paying attention. But I also think, whether you stick cash under your mattress like Billy, or you go for conservative investments and be safe, I think from a business owner's perspective, it's no time to panic, but maybe it's a time to prepare, because the people who excelled in 2008 and 2009 were the ones that were waiting for it and that were ready.
Well, it's too late. I sold in 2015, and it didn't start dropping until after the first of the year. So I think I made the right move. Right. I got lucky, but I'll get back in once the market goes and finds that equilibrium, which could be lower than the 666 number that we experienced in 2009. So it could be a severe readjustment. But I'll say it again: as long as we keep investing pension fund money and people's retirement money into the stock market, if we can't find another vehicle to protect people's savings, the country's in big trouble. And the stock market is just going to go, to zero. And then what's going to happen?
Well, I would just say, listen, now's the time not to panic. And there are plenty of other vehicles to use and put your money aside into out of the stock market. And now's the time to take a step back and really take a look at your business and say, hey, is there an opportunity here to reinvest in what we're doing and just kind of double down and get ready for it and prepare for when everything goes back up?
It's really taking pause and thinking about, thinking about what can your business do different, and really predicting what could the trends be. And that's who's successful, right? And businesses are the ones that read trends and the ones that can adapt accordingly and be prepared to spin on a dime. Hey, Billy, I'm going to let you go. I'm going to say goodbye to Tim, let you promote. But hey, thanks for joining us and challenging the conversation, letting us hear your view. Appreciate you being on.
Okay. Bye. All right.
Right now, a lot of Americans are buying properties in Canada because the dollar is so low in Canada. I think that's a great point, because it's a great time to invest where, some of the economies aren't as strong. And that's what happened. In 2008, we saw China come in and invest and buy much of New York City, right? We saw some heavy investors. But hey, Tim, I love the conversation. I love that you are just like calm and steady with this. And I think that's what's made you successful and what's made the people that are in your portfolio successful. That's what I love about you. That's what I love about the company that you work for. I think you bring it, you don't panic, and you help people see what the future holds for them, and you protect them. So why don't we just kind of wrap up and tell everybody how they can get a hold of you, Tim? And
yeah, sure. Well, and like we talked about before, Colleen, I was just going to say, we're here to help people live the lives they want to live and prepare for that. So you can always get a hold of me. My cell phone is 866-8634. Email is timothy.d as in Daniel .nihill, which is N as in Nancy, IHILL, @ML as in Merrill Lynch.com, or contact Colleen and she'll send you my contact information.
And you guys know it's Colleen at smallbusinessus.com. You can reach out to me and reach out through LinkedIn too. If you can't remember all that information, reach out to Timothy Nihill on LinkedIn. Either way, we'll get the message. I'm Colleen Ferrary on LinkedIn. I'm so glad to have all of you join us today. And it was really an engaging conversation. I hope if nothing else, you guys walk away and think a little bit about your business and how you're going to move into 2016 and all the craziness that we have going on this year safely and competently and securely. So if you need help with business, please call me at Colleen at smallbusinessus.com. If you need help with your financial suite of products and wealth management and making sure that you're secure for the future, reach out to Timothy Nihill. Thank you so much, Tim. I appreciate you being on there. All right. Have a great day, everyone. Thanks for joining us.